Financial Argument. Follow us on YouTube.
Let's get into the economic collapse financial news. Well, as we look at the economic indicators, the indicators are getting worse and worse as we move further into 2016. If we look at Caterpillar right now, we know the CEO resigned. Caterpillar is doing absolutely awful. And we see there's another month of declining global sales. This is the 46th month in a row that this company has declining global sales. Now, according to the latest monthly release of global retail sales, which is due out tomorrow, the company reported that North American sales dipped by 23%. This is the steepest monthly decline since February of 2010. Now, the rest of the world didn't do that much better. We see out in the Middle East, we see it's down by 17%. Latin America is sliding to 23%. The only place that it was up was in Asia, which it rebounded by 3%. But when we look at the sales, we can see right now that the company has now reported a single monthly uptick in sales, has not reported, I should say, a single monthly uptick in sales for 46 consecutive months. A period right now which is 2.5 times longer than the 19-month drop right after the financial crisis of 2008, which shows us that we are in this incredible recession at this point. We're looking at the economic indicators, and we can see the corporate media, they are doing whatever they possibly can to make it look like all of a sudden everything is getting better and surging. Like, for example, U.S. manufacturing. U.S. manufacturing PMI has risen to the highest in 12 months. But when we look at the U.S. manufacturing PMI, where did it really go? Because they're saying it has surged. Well, if we go back in time, and we go back to January of 2010, we saw that manufacturing PMI surged to 59. Now, from January of 2010 going forward, it bounced around anywhere from 57 down to 51. And recently, we can see in January of 2015, we were at about 56, and it has dropped and dropped and dropped to the lowest point of 51. And it has surged, as they like to say, back up to 54. But from that high of 2010, we have gone nowhere. So is this a recovery? No, because when you look at the graph of the U.S. manufacturing PMI, it really hasn't gone anywhere. It's actually stagnant. We see the Baltic Tri Index right now. It has dropped to 831. Again, this is seasonal, but this is at one of its lowest points, especially right before the holiday seasons. We've seen an uptick up to about 900 or so points. It has been dropping and dropping and dropping, and here we are at 831, and we'll have to watch that very carefully as we move throughout this year. We see out in Austria, after years of securing its official gold reserves, the Central Bank of Austria claims to have completed its audits of its 224 tons of gold stored at the Bank of England. But something very strange about the audit is that they will not release it. They will not publish the audit reports and the gold bar list. What could possibly be so sensitive to hide from the public eyes? Which makes no sense. Is gold missing? Is half of it there? We don't know. Why aren't they providing full transparency? Why are the central bankers so secretive about their official gold reserves? And if you notice, here in the United States, guess what? There's no audit of the gold here in the United States. Now, what's very interesting about all of this, in grocery stores, department stores, they do inventory once a year, because it's the only way to get rid of, unreasonable allegations of what the store has, and it's great to balance the books. But for a country and the central bank, they never audit the gold holdings. Wouldn't you think that is much more important to do and something that we should be doing? But it seems like the central bankers, they don't want that done at all. Now, under Sharia law, Muslims don't invest in gold, but that is going to change most likely before the end of this year, because they're working on a new law which will allow Muslims to purchase gold, which means there's about 1.6 billion Muslims right now that don't invest in gold whatsoever. The proposed Sharia-compliant gold standard under development by the WGC and the AAOIFI states that gold investments must be physically backed by gold. And it just so happens that China has created the Shanghai Gold Exchange, where that is backed by physical gold. The COMEX is not backed by physical gold. That is a paper market. And we can see right now that in the Muslim world, they haven't been purchasing gold at all. So what does this mean? Well, you have the Islamic savers, investors, and they hold about $2 trillion US dollars in assets. This represents a potentially huge new demand for gold and gold-based financial products. A recent report by Ernst & Young stated that 93% of Islamic financial assets are held in 9 core markets: Bahrain, Qatar, Indonesia, Saudi Arabia, Malaysia, United Arab Emirates, Turkey, Kuwait, and Pakistan. And once this law passes and it allows them to purchase gold, guess what happens? There's more demand. That means prices are going to go up. Now, are the central bankers, are they going to allow prices to go up? No, we're going to see most likely more paper contracts thrown at the gold market to suppress gold. So we have a battle going on right now, because we have billions of people who will be purchasing gold. We'll have the central bank trying to suppress gold, and most likely we will see gold move up a little bit. Do I think it's going to go higher than 1,300? I do. I think if this happens, we're going to see 1,500 gold easily, and they'll probably hold it at that area. I don't think they'll be able to control it. I think the gold price will move up, and they'll try to hold it steady at that area. And we can see right now that as there's more demand, guess what's going to happen? Eventually, we know that the central bankers, they're going to lose control of the entire market. They will not be able to keep this steady. They will not be able to control it. And eventually, gold will skyrocket. And like I said before, when you see gold moving at $50 clips, $100 clips, and they keep, and the price continually moves up, and it moves up quicker and quicker each day, that is a sign that there's more and more people purchasing, and the gold price is starting to move up. And this is the sign, the signal, that the central bankers are losing control. And we are definitely going to see that, because what we're seeing right now is an entire system which is completely falling apart. And we've been looking at all the economic indicators, and when we look at them, we see that the economic indicators are either the same as 2008, or many of them are worse than 2008. And we're coming into this holiday season, and most likely after this holiday season, things are going to change rapidly. And this is why everyone needs to be prepared. You should be purchasing gold and silver right now. You should be purchasing food and water, supplies, because we can see right now we have many things occurring at once. We see the petrodollar is under threat. We see the elections that are going to happen. We see this new law that's going to bring in about 1.6 billion people, and there's going to be trillions of dollars floating around trying to get the same physical gold. And all of this is occurring at the same time. At the same time, the economy is rapidly deteriorating. I mean, we are definitely in a recession at this point. There's no two ways of looking at this. Because we've been following these economic indicators, we've been looking at retail, it's contracting. We've been looking at unemployment, which is completely manipulated. We have hundreds of millions of people that are not counted anymore. Home ownership is at its lowest point since the 70s. We see corporate defaults on the rise. We see delinquencies on the rise. We see the stock market bubble, the treasury bond bubble, the student loan bubble, the auto bubble. You name it, we have bubbles everywhere. Deutsche Bank is in trouble. They're just trying to keep them operational. And when we look at the entire system of what the central bankers have done, and we go back in time, really, the central bankers, they didn't improve anything. They kept everything at a certain level because that's all they could do. They can't create jobs. They can't make the economy better. So their entire plan from the beginning, when the 2008 Great Recession happened, was just to hold the economy steady and keep the illusion alive. Because when we look at these economic indicators, what do we see? Everything is stagnant. There's no growth. There's nothing. And this was their plan from the beginning. Just keep it steady long enough until they can bring this economy down. They can have a controlled demolition where they can blame it on another group or another country. This is what they've been doing, and they're getting very close to bringing down this entire economy. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.